Well, today on the Farm Finance Show, I will be talking about oil and gas and diesel prices, and our gas and diesel prices overpriced. Well, if we look at a regression model of what's been happening with oil and diesel prices, you can see we get something like this. So what I've done is I've taken several years of oil and gas prices and diesel prices, and then plotted a regression of the gasoline price and the diesel price against the oil price, and you can see we get something like this, where most of the time the points follow a fairly good regression. There's a very high correlation between the oil price and the two fuel prices. We see up here, though, we do get some numbers that are kind of out of whack here. And if you listen to my video earlier about why some of these price premiums exist for diesel fuel, some of that has to do with our supply constraints and the fact that we probably are a little short of refinery capacity here in the U.S. But going through and looking at what the oil price currently is, you can see this is the daily spot price from oil out of Oklahoma. You can see currently we're looking at oil prices that are right about maybe $75, $80 per barrel or so, something like that. It certainly has come down quite a bit from when we were back here at the start of the Russian-Ukraine war, where oil got up to about $130. It has since kind of backed off quite a bit, so we're really almost even lower than what we were pre-Russian-Ukraine war, so about $75, $80 per barrel. Well, again, how does this translate back into what the fuel price would be? Well, over here with the regression with oil, you can see if the oil price is $75 to $80 per barrel, we're right in here for what the regression line tells us. That says gas should really be right here nationally, right about a little bit about $3, about $3.25, which is probably not too far from what it is nationwide. And then if we look at diesel fuel, we should be right at about $3.50 per range. And if you looked at my video from earlier about the diesel premium, we're quite a bit higher than that nationally, which again goes back to the constraint issue. So until we get the supply issue and the fact that we really need to generate more gasoline and diesel fuel based on the amount of oil that we have, I think we're always going to be above this, and probably that's going to go in for the foreseeable future. I would say at least for the next year or so, if we can actually ever get this diesel supply situation back to what I would consider to be normal again. So we'll have more later talking about what's happening with the supply of oil and gas and diesel fuel.